Hello, everyone. Welcome to City University and Stanford Institute of Philanthropy and my presentation today, which is on fundraising and finance. Online people, hello. And Austin is here to help me moderate the chat and advance the slides and all of that. So thank you, Austin. Just a little about who we are before we launch into our presentation. I am, if you will, the Stanford Institute for Philanthropy at City University. We have a very generous patron that our national affiliate, through him, he funds several of these institutes around the country. And our mission is to support the nonprofit community to help them achieve greater impact by offering fundraising training and support to the nonprofit community. Plain and simple, that's what I do. I get paid to teach and collaborate with people on how to raise money and make their nonprofits better, or better is the wrong word, help their nonprofits achieve greater impact. Go ahead. Stanford Institute is based on a curriculum that's based on the cycle of fundraising that many of you are probably very familiar with. There are 8 stages, from prospecting all the way to stewarding and managing the relationship with your donor. And a little bit about me. This is my year. I've been here for a year at Stanford. Started July 1 of 2018. And I have a background in fundraising that is mainly in the arts, but in social services as well. And now I get to help and work with all kinds of nonprofits across the spectrum, because so many of them come to our trainings, etc. I went to NYU. I have a lot of expensive degrees, but the reason this is important today is that I also got a doctorate in financial management and nonprofits. So I have a lot of theoretical and a good deal of practical experience too, from when I was an executive director or development director with budgeting and accounting for gifts, et cetera, et cetera. So that's me. At the end, my contact information is on the last slide. For those of you here in the room, I have my business cards out, and if you ever want to reach out to me, questions or comments or what do you think about this, feel free to do so. So let's dive in. We have today's takeaways. It's the class, workshop, whatever you want to call it, is kind of split into 2 parts. The first part is really an overview of finance. Okay, I teach this also at Seattle University. And I find that students, even though you're not students, but bear with me just for the sake of a better word, no better word, financial management, financial information, numbers, etc., are very intimidating. So maybe that's not true in this group. If so, shut me down and we'll move on to the fundraising part. But I found that just doing an overview and trying to put financial issues and statements into concrete kind of examples that make sense take a lot of that intimidation out of it for those who are working with them. And then the second half, we're going to talk specifically about fundraising and finance, how they can partner, what some of their areas of commonality are, what some of their areas of difference are, and some suggestions for how to work with your finance team and why they might be doing some of the things that they do that you don't understand. I mean, I'm assuming this is all fundraisers. And are there any finance people out there? Raise your hand. Are we all fundraisers in this crowd?
One person.
We've got one finance. Okay, couple. Sounds like we're getting the beeps. So finance folks, I value and welcome your perspective as well, because we're all here to learn from each other, right? So moving on from the takeaways from today, I put down some ground rules because when I've given this workshop before, people can be hesitant to talk about stuff that happens inside their organization or whatever. Anything said in here stays in this room. You don't go and, probably don't need to say that, but if you have that on your mind, don't worry. I always send out the slides and a link to the recording. The session is being recorded after the workshop, so you can watch it later, or obviously those of you who signed up so you could get the slides, you will, even though you're not here with us. And please, this is interactive, so feel free to comment, question, challenge, add your own perspectives as we go along. And again, Austin is moderating the chat room, or you can unmute yourself online, folks, and just speak up. Any questions so far? How are we doing?
So far, so good.
So far, so good? Okay, let's go. Let's go. So, why is it important for fundraisers to understand financial management? Why? And I'm glad you guys are here. But sometimes, we might think, okay, we're fundraisers. It's our job to raise money, and the accountants are the ones that take care of it, right? Okay. Well, I would propose that there are a number of functions about knowing the financial statements, knowing what your position is, knowing how the money is managed, that are going to help you with your donors and be important for that reason. Stewardship, right? Donors want to know that your gift is being managed well. Their gift, pardon me. They want to make sure that it's being taken care of, applied to the right program, et cetera, et cetera. They also want to be sure that there are going to be controls in place so that fraud is minimized. They don't want to give their money to somebody who's going to, quite frankly, be subject to the possibility of embezzlement or misuse of the funds, right? We want to remember that diverse revenue streams are important, and we want to remember that planning for diverse revenue streams is something that you can use financial tools to do, most specifically the budget process, okay? When I talk about diverse revenue streams, what do I mean? What I mean is, if your organization is, say, funded entirely by one very large grant, is that a good idea? Probably not. So we want to use some of the tools that we talked about in the development planning session when we're forecasting our revenue, which is a finance function, right? The budget is a finance function, to perhaps think about diversifying those streams, okay? Understanding financial reports.
No.
Is there a question? No.
I advanced the slide on that.
Okay. That's okay. We want to be able to understand what the financial statements tell us, and more importantly, what our donors see. We want to be able to understand what our donors are also seeing, so that when they come with questions, we can explain it to them, all right? So we want to be able to understand, especially contributions sections, and be able to explain those to our board and donors. Any other thoughts on why it's important for fundraising professionals to understand financial management? Did I cover them all? Okay, let's go ahead and move on. We'll start talking about finance first. So this is an overview of how financial management works. And it's important to understand for this that these are functions, okay, not people necessarily. In the largest nonprofits or the largest for-profits even, you can talk about your mom and pop small business as well as your tiny nonprofit in Granite Falls. Yeah. I'm picking on someone here in the room. These are functions. So regardless of if you have these people in your organization, this is how it happens. First, we have bookkeeping. Bookkeepers do what's called the general ledger. They record financial transactions, they pay bills, and they do reconciliation between accounts. That's reconciling between the bank statement and any number of accounts that are in the organization. And who balances their checkbook? Everybody's cringing. Okay, we've got one person that does. If you balance your checkbook, you know what a reconciliation is. It's what the bank says versus what you have in your ledger, your account, whatever. That's what bookkeepers do. Okay? They pay the bills, they receive, and etc. They feed the information that they record from financial transactions up to accounting level. Okay? There are 3 branches of accounting function. Managerial accounting are the ones who forecast. They plan and control for financial events. So they are mostly involved with budgeting and forecasting revenue and expense along the way, not just at one point through the year, okay? Then there are the financial accounts, and this is probably what you think of when you think about finance. Financial accounting is reporting on financial events after they've happened. These are the folks who produce the balance sheet and the income statement and cash flow. And then there are cost accounting folks. There's cost accounting. That's allocating basically cost behavior. Where do we apply this cost? You know, when you make your, and you know what I'm talking about when I tell you that, say you're doing a grant budget and you're trying to decide how much of the executive salary can I allocate to this grant. That's cost accounting, okay? It's figuring out how costs behave and how they should be distributed amongst programs in the organization. All that information gets fed up to the financial management level, folks. And these are the ones that really take the big picture, okay? And again, this may be the same person in one organization doing all of these. It's a function. But financial management is about looking out at your future and saying, okay, what can we do to make this organization more financially stable? What about sustainability? What's all this information telling me about our financial picture and how it needs to either change or hold still so that we are in a good financial position, okay? And this person's also the one generally responsible for communicating that to the public, the board, the rest of the organization, etc. Okay, questions on that? All right, so going on, we've got our first function that I want to talk about is the budget. That is a financial management piece. Hopefully the whole organization is involved in it. This is again, a managerial planning function, and this looks forward to forecast the revenue and expense that the organization needs for its planned activities. It is a plan, okay? Fundraisers are one of the two departments in a nonprofit that, well, I take that back. Fundraisers are one of the few departments in a nonprofit that forecast both revenue and expense, okay? In general, your marketing people and your fundraising people are the ones that do that. Sometimes the program folks, when it comes to fees from clients, and they have to estimate, etc. But I guess it's important to be able to know that you're in somewhat of a unique position. You know, a lot of folks in your organization, your IT people, for example, your IT people, or you, if you're doing the IT function, do not plan for revenue. They don't generate revenue, right? All they do is spend. That sounds bad, but you know what I mean. Fundraisers, on the other hand, bring it in and spend it. So know that you have a big role to play in the budget, okay? So go ahead and move on. This is a cyclical representation of the budget process, okay? And I understand, because I did a lot of work with this, that there is no one way to budget. There is no there are some suggested best practices, but people and organizations do it differently all across the country and I'm sure around the world. And I found that out personally when I did a study on it. So we start at the top with planning, okay? What does that mean? We look at our plans for the coming accounting period, whether it be a year or quarter, whatever, and we say, okay, what do we want to accomplish? What does our strategic plan tell us? What are our goals? Then we start to attach numbers to that. In terms of expenses, what do we have to spend to accomplish this? And in terms of us fundraisers, what are activities likely to bring in? What can we raise with the plans that we have going forward into the next year, quarter, whatever the period is? Then the expenses and the revenue is compared. We think we're going to spend this much. We think we can raise this much, right? Inevitably, they don't match, or they don't match in the way that we would like them to. Then we have to go back and negotiate. Okay? So the policy decision maker, usually the executive director of the board, or your department head, and moving to a little mid-sized and larger organizations now, they'll, as a team, look at the size of the difference between revenue and expense and say, all right, we need to cut, we need to add, we need to consider our programming again and decide what our priorities are. We can't do everything we want to do with the revenue that we forecast. And that's when the political decisions come in, and it's a tough process for those of you who've gone through it, are very much aware, right? But eventually we get to a place where we can submit the budget to the board for their approval, and then there's more negotiation. The board might say, yeah, this is great, thanks, let's go. Or they might send it back to the staff and say, well, you know, we're not confident that this is going to quite work. Can you do some more work on it? Eventually they hopefully do approve it. I've actually never heard of a board not eventually approving the budget. I'd like to know what happens when they don't. We move forward, and then the budget is monitored for variances. Hopefully on a monthly basis, your finance team will pull a report showing what you planned for and what's actually happening. Those are called variance reports. They send them out to your team. You look at it and say, yeah, this is happening because we had to spend more here. This is happening because we brought in more than we expected. And going forward, this is either how we're going to correct this, or we're on track, we're on course. Yay, woohoo, let's go. And it's a cycle because it goes and really kind of never stops, right? Any questions on budgeting? Yeah, it is pretty basic. But let's, and you know, I debated this part because it is fairly basic, but the truth is when I've been out there talking to people and studying this, A, it never happens the same way. B, it's amazing to me often how few of the team in an organization are invited to participate in the budget process. And I guess I'm a little bit of a what am I, evangelist and saying everyone should be sitting at that table, right? And this is one of my big pleas, recommendations. I don't know what it is to you, but if you are a fundraiser, and especially if you are the fundraiser in a smaller nonprofit or whatever, and you are not participating in the budget process, there's something fishy in Denmark, okay? And so my question is, where does or could the development team participate along this cycle? What are your thoughts?
I've dealt under a board, so for me it's understanding what each board member's responsibility is and where they would fit in the budgeting. Because
for a volunteer-driven organization, understanding Sherry, right? Stephanie, apologize. Work is just transitioning out of a completely volunteer-run organization, and was saying the board
from that organization to truly understand their fiduciary responsibility to fundraising, and or for that matter, a real need for the board. Just if you have a need, spend it, and just give us a line item of what your costs were, and we'll decide if they're reasonable or not.
Okay, so lack of understanding on the board's part of their role in fundraising and their fiduciary responsibility is someplace that the development team might be asked to either take over, which that's another road to go down that could be a rabbit hole, or they need to be educated. Right? Online. Any comments? Okay, so budget I think everybody probably gets pretty well. I think the important thing to take away from this is that it is a financial function, and there is a very big place in it for fundraising. All right, so let's move on to the financial statements. Ready? Okay, so in the financial management world, there is an organization called the FASB, the Federal Accounting Standards Board. And the FASB is a nonprofit itself, and they are responsible for producing what are called GAAP, Generally Accepted Accounting Principles. You'll hear a lot about GAAP if you hang out with finance folks for any length of time, because this is their Bible. This is what they use to make sure things are done correctly, okay? Now, not everybody uses GAAP, but in order for your books to be audited by a certified professional accountant, they will not audit you unless you are using GAAP. So it's important to familiarize yourself with nonprofit GAAP, and then decide if it's important enough for your organization to use them. They are generally considered best practices in the nonprofit management world, and that's why I'm bringing them up here today. So, generally accepted accounting principles, and they are different. They vary between for-profit, nonprofit, and government. Okay, everybody, all three of those sectors have their own GAAP. How am I doing so far? Within the accounting world, There are generally two systems with several modifications and twists and turns. GAAP and cash, okay? So let's go on to the next slide. If you have money in your life at all, you know what the cash accounting system is already, okay? Cash system is what most individuals use for our daily transactions, right? We spend money, we get money in. We don't account for or record any financial activity until we have cash in hand or we've put cash out the door, write a check, use a credit card, whatever. All right? The accrual method, however, is GAAP. GAAP is accrual. So accrual allows you, an organization, I say you incorrectly, allows an organization to record revenues when they are earned and expenses when they are incurred. Now, what does that mean, you say? All right. We've got an example here, okay? So I use fundraising examples so that it would make more sense to y'all. All right, so I put here a month's worth of, not really, of course, but a month's sample, December 2019, for some things that might happen in fundraising and how they would come out differently under accrual versus cash, okay? So let's say December 2019, I'm going to come over to this side. In our revenues, one of the things we got was a pledge letter for a $50,000 grant. We did a direct end of the year, we all do them, right? Direct mail appeal trying to garner monthly recurring gifts. And we got 10 gifts of $100 a month, the first month of which was paid that in December. For expenses, we have a gala coming up in spring, in May, okay? And we also had to pay the printer for direct mail. So let's go through these one by one. A grant under the cash system, again, would not be counted until you got the check. This is a pledge letter. So under accrual, you may count a pledge under many circumstances that I don't go through here today that because of time. If you can measure it, you can value, you're sure it's going to be collected, etc. So we can count that $50,000 in December even though we do not have the check. We do not have the $50,000 in hand. Everybody with me so far? Online, how you doing? Everybody good? Okay. For our direct mail piece, we got 10 pledges, if you will. 10 people said that they would start making recurring gifts that month, $100 a month. Now, recurring gifts are accounted for differently than pledge letters because a pledge is finite. Recurring gifts, in theory, do not have an end date. So under accrual and cash, they're the same. We got 10 gifts of $100. We have the cash, because people paid in December. And here, we have the cash as well, knowing that we'll be getting $100 a month over the next X number of months. We cannot account for that as a recurring gift because it's not a pledge. Does that make sense? They're treated as cash payments. But look at the difference here. Our totals are $1,000 under the cash system, $51,000 in revenue under the accrual system because we were able to take that grant pledge letter and recognize it even though we did not have the check. Everybody with me so far? Online folks? Okay. Expenses. Remember, we recognize expenses when they are incurred, not when they are paid under accrual, right? So we hired a printer to do our direct mail system, our direct mail appeal, and that printer cost us $3,000. Since we did the appeal in December. We got the bill in December. We incurred the expense. We didn't pay it because the terms are net 30 days. We don't have to pay till January, right? So under cash, 0 expense. Under accrual, we're going to recognize that expense in December, even though we have not yet paid it. Okay, so far so good? Online folks, everybody okay?
Mm-hmm.
And then we put down a deposit for our May gala. Now, because we're putting down a deposit, this happens we have to write a check or give a credit card that's charged, right? So that's the same in both systems. Accrual and cash. We counted in December because that's when the expense was incurred and when the cash was, or check or credit card payment was made. So far so good? Okay. Look how our totals are though now. 2,500, 5,500 over there, but when it's all done and said, we have a deficit under the cash system, and we have a 4,500 balance. You know, it's not a surplus exactly, but a net positive balance under the accrual system. Now later on, we'll briefly talk about how this means that another statement is necessary, the statement of cash flows. But for now, I mean, I just want you all to see the difference and understand that when you're dealing with your finance folks, they are, first of all, you should ask them, do we use cash or accrual? Because that affects the financial statements. Often, you know, if you're not lined up with the finance team, you may be counting a pledge that they're not, or you know, some kind of wacky thing like that happening. So, moving on. All these transactions go into the financial statements, okay? Financial statements are backward looking. They are reporting on past events rather than forecasting future events, as does the budget process, okay? So there are 3 main financial statements, and their terminology differs between the for-profit and the nonprofit sector. So you may be very familiar with one or the other, okay? Nonprofit has a statement of position. In for-profit terms, this is the balance sheet, okay? We also have the statement of revenue and expense, which in for-profit is the P&L, or the profit and loss statement, okay? And then the statement of cash flows is the same in both arenas. Nonprofits are also required to produce what's called the statement of functional expenses, both for their audit and for their 990 tax form that we all file, okay, even though we don't pay taxes. And we'll touch on all these. And again, I want to emphasize, when I teach this, it makes the students insane because the terminology is different between the sectors, but people use it interchangeably. And my students would be like, no, wait a minute, I thought we didn't have a balance sheet, but I just read about it in an article. I'm like, well, I'm sorry, yeah, I know. But it is interchanged quite a bit. Just know that we have our own terminology, and you should know what it is so you know how to compare what they're talking about. Okay, so far so good? All right, so first we'll start with the balance sheet, or the statement of position. There's a question?
One quick question online. Somebody asks, what is the statement of position in for-profit?
In for-profit, the statement of position is called the balance sheet. Great. And we'll start with that. So, perfect, you took my first bullet. This is the balance sheet. And the balance sheet is a report of, at one moment in time, it's often called the snapshot. Everything's right then and there, what you own and what you owe. What you own are your assets. What you owe are your liabilities. Okay? These are divided into these 2 sections. Assets are at the top, liabilities are at the bottom, and they are listed in the order of liquidity under that section. Liquidity is the amount of time that it takes you to convert something to cash. So for example, under your assets, cash is at the top. How much more liquid can you get than cash, right? And way at the bottom, you'll find the things that would take a long time to sell or convert to cash, like your land or your fixed assets, your property and equipment and stuff that's not so easily or quickly is a better word, sold on the market. Okay? Same with your liabilities. The ones that are coming due soonest to the ones that are more long-term at the bottom. Okay? Go ahead and try to make this into sense, and this is a totally, for a couple of reasons, this is a personal example that's to illustrate a process, but let's say, if you had we're making your personal balance sheet, okay? Today, on July 25th, 2019, you would take stock of what you own and what you owe, and you would say, okay, I own a house, I own a car, and I have a retirement account of $100,000. Those are my assets, okay? What do I owe? Well, I might own the house and the car, but I've got a mortgage and I've got a car loan, right? And to have even more fun, I went to college for 8 million years, so I've got a student loan that I have due of account balance of 100,000. Is this helping make sense to y'all? Okay. So we look at our total assets, we look at our total liabilities, what we own and what we owe, and we take the difference, and in nonprofit world, these are called net assets. That is the residual of the difference between the two that the organization can use as it sees fit. Now, this is an important point, really important, that nonprofits have net assets. Why? Because on a for-profit balance sheet, this would be the stockholders' equity. This would be what shareholders own. We don't have shareholders, and we cannot, no one can inure to the benefit of a nonprofit organization. We always have to put our surplus back into the organization, right? So when we talk about net assets, that's what's available to us to put back into the organization. It is not, as in for-profit, what's available to the shareholders to either pay to themselves as dividends or reinvest. They also reinvest in our organizations, try to grow or do R&D or whatever it is they do. But we don't have that option. Net assets are what is available to the organization to put back into serving the community. Everybody with me? Online, everybody good?
Mm-hmm.
Okay, that's the statement of position and or balance sheet. Now, next we have the statement of revenue and expense. Revenue and expense measures what happens across a period of time. Usually a month, but of course at the end of the year, it'll be across the year, right? So balance sheet stops and takes stock. Revenue and expense says what happened this month and how did we come out at the end of it, basically, okay? So often because of the nonprofit sector, we have what's called fund accounting. You will see your statement of revenue and expense split up into your unrestricted, temporarily restricted, permanently restricted funds or accounts, okay? Let's do another personal example. This might be someone's personal statement of revenue and expense for the month of July. They have a birthday in July, just to provide you the background. So for revenue, they get paid a salary, they have a roommate that helps with a little bit extra money, and they got $300 in birthday gifts from moms and people that write checks and send them to you on your birthday, right? For expenses, they had to make a house payment. Remember, there's that mortgage liability, right? They had to make a car payment, same deal. They had to make a student loan payment. So you're kind of matching up now, seeing where the liabilities that we looked at in the other form are expenses here on this statement. And they have to live. They have to eat, they have to put gas in the car, so living expenses $600. The balance sheet has to match, okay? The assets and the liabilities plus the net assets have to match. They have to be the same. Statement of revenue and expenses does not. In fact, we hope that it's not, because we hope that we brought in more money than we've spent. Okay? Everybody clear on that? Everybody doing okay? How you doing online, people? Thumbs up? Okay, excellent. Let's go on. Going way back to our example of the cash versus accrual systems. You guys remember the 4 examples with the direct mail piece and the grant pledge and all that? We ended up with 2 very different totals, right? One was a deficit of like $1,500, the other was $45,000 change to the good. But here's where the problem comes in. Accrual accounting does not take into very good account what we actually have in the bank in cash and what is still just on the books. Okay? In order to rectify that or address that, we have what's called a cash flow statement. All right? Cash flow statement looks at all the financial events over a period of time, a month, a year, whatever it is, and adjusts for events that are not cash events. Okay? So if we went to our cash flow statement for December 2019, that $50,000 grant would be taken back out because it is not cash in the bank. And this cash flow statement tells you what your cash position is, because can we pay our electric bill with a pledge letter? Anyone?
No.
No. So we need to be able to have some way of monitoring what cash we really do have on hand so that we know our cash position and know that we're not sailing towards stormy seas. And that's what the cash flow statement does. It backs out or puts in non-cash items. And I won't get it, there's a lot of them that have to do with borrowing money or selling property and your operations. But the big ones are, in our world, pledges, deferred revenue. Say you're in, a really good example of this is if you're in the arts and you sell your season tickets in March and people pay, right? But you haven't delivered the services yet. That's called deferred revenue, and you can't use that cash until you have performed those services, until you started offering performances so people can come in. That's kind of, cash flow is a sticky topic, and there's a lot of technicalities, but I just want you to know the big principle is that this tells us what our cash position is, exactly how much we have in the bank and how we used it to get there. Okay? Questions online?
Not at the moment, but I'll let you know if anyone's in this one.
Awesome. I just keep checking because, yeah. Okay, so last is, this is particular to nonprofits, okay? And all of you who are answered questions about what do we spend on to raise $1, and people want to know. This is where they get their information, all right? So the statement of functional expenses is a nonprofit GAAP requirement, and it takes your total expenses and divides them into 3 categories: program, fundraising, and administrative. And it's required for the 990, and if you're audited, it has to be produced for the audited financial statement. Okay? So here's again another example. Statement of functional expenses for Home for You. So we know that Home for You seems to run 2 programs. Let's say they have a shelter and a soup kitchen, management in general, and fundraising. So their auditors and their accounting staff have split out the costs, cost allocation, remember, cost behavior, into these 3 categories, or 4, so that it's shown that they spend 68 plus 131 on their programs, 40 and 21 on their fundraising and admin. And then you calculate it in percentages. And that's the information that people use, the Charity Navigator and the watchdogs go and find when they want to know how well well, in quotation marks, because of course this is all under debate now as to how much should be spent on fundraising and admin, but how you're allocating, you're using your donors' gifts and your money. And you can find it if you're curious about how other nonprofits do in those statements. So go on GuideStar and look them up and find what you need to know. Statement of functional expenses. All right? Questions? How y'all doing? Is everybody exhausted? How am I doing for time, Austin?
It's currently 12:25.
12:25. Okay, we're right on target. So I think it is break time. Wanted everybody to know there's one more. So some of the unique features of Nonprofit Academy, just wrapping up, you've heard some of this already. Nonprofits are required to use what's called fund accounting. Fund accounting is the big fancy term for dividing your revenue, your contributed revenue, into what we all know: unrestricted, temporarily restricted, and permanently restricted. Those are funds, okay? So it's required for all nonprofits by GAAP, and that is why. Why do we do this? It's up there. So we can be accountable to our donors, okay? So they can know that if they gave us money that they designated towards a specific program or over a specific time period, that it is indeed being used for that, okay? So, unrestricted revenue, what's that?
General cash donations.
Cash donation, general donations to which the donor has attached no stipulation. Here's my money, take it and put it where you think it will be best for the organization, okay? Temporarily restricted. Temporarily restricted gifts are restricted by two things, one of two things, and sometimes both. Purpose, for how you may use the gift, and time. How long you may, how the gift is going to be given over 5 years. You have to use it by a certain time. You have to complete your project period ends, et cetera, okay? These are always determined by the donor, and the nonprofit has to abide by their wishes, okay? You will see, like I said, sometimes the financial statements broken into these three categories, so you know exactly what you have available in each one. Okay, questions on that? Fund accounting. Okay, now it's break time, so everybody stand up, come on. Clear your head of the cobwebs of financial statements. Stretch. Who can touch their toes?
I'm not in this dress.
Oh, it's Thursday, right?
Yes.
It's Thursday? Okay, one more day till the beautiful weekend, people, right?
Hopefully it's beautiful again like it was this last weekend.
Yes, agreed. I went out to swim for the Lavender Festival. It was hot. It was quite warm.
Yeah.
But okay, whatever. It was gorgeous and wonderful time. And I think we have a good forecast, right? Tomorrow's going to be 83, and
Beautiful.
no reason to believe that, well, yeah, for California, you probably think so.
I actually, even driving here, I was like, oh, it's too hot. Sitting in the car.
It's happening. Your blood's
Yeah.
thinning.
I love the cold weather and the gloom.
You do?
Yeah, I do. I definitely would want to go on vacations, for sun, maybe,
Mhm.
I go to California to see my friends and family, or, maybe go to the Caribbean or
Maybe go to the Caribbean. I don't know.
But living in the heat, nothing.
Yeah, I don't know how people do it. A friend in Florida, 103 degrees, and
They're
then
inside.
at 8, yeah,
They're inside.
8 o'clock, it's still 80 something, and I'm like, oh, I don't think so. Okay, we ready to roll?
Mhm.
All right, let's do it. So now we get down, we take all that information, now we have tools at hand, or at least know where to start doing some Googling about how we can communicate with our fundraising team, how we can share our financial information with our donors and board, etc. So now we're going to get a little bit more into the nitty-gritty, I call it, of working with our finance team. And truth be told, there's two rationale behind this for me. First of all, of course, I studied I know a lot about both. And so I've been on both sides of the coin and seeing how there can be, you know, conflict is too strong of a word, but tension between fundraising and finance, because as I now know, different orientations, different skill sets, etc. I forgot the second piece, so we'll just move on and it'll come to me and I'll speak up spontaneously like I so often do. So there actually has been a national study about how fundraisers and finance people get along, and get along in quotation marks because we're talking about working together, not talking about whether or not they can hang out at the same social thing. And actually, Austin took my slide away, but 45% of finance people and 55% of fundraisers reported that they have really not such a collaborative relationship. So that says something to me. I hope everybody appreciates my little foxes. I had a great time finding that photo. That we need to do, in some cases, a better job of understanding each other and communicating, etc. So go ahead and go, Austin. Some of the commonly mentioned issues between the two departments. Budgeting. You can see on the slide, I'll just read it out for you. Who sets the targets? Are they realistic and backed by planning? Understanding on the part of the non-fundraisers, if you will, and I mean everybody in the organization at this point, not just the finance team, that you have to spend money to raise money. That is not always well understood or agreed with. Okay? Anybody arguing out there in internet land or here in the room? Okay. Understanding recording and reporting requirements. The timing of recording gifts. Whether or not a gift can be recorded. Different understandings of, you know, is this verbal pledge from a board member acceptable, or do we need to have it in writing? One side's going to say yes, the other side's going to say no, right? Differences in classifying gifts. Is this check from the Seattle Foundation, one of the donor-advised funds, an individual gift or a foundation gift? Okay, and I kid you not, these are all from personal experience, so I'm not pulling it out of the air, right? How we deal with multi-year gifts and year one and subsequent years. There's a big difference in understanding about that. And different treatment of pledge payments. Okay? A few more issues. Go ahead, Austin. Personality types. It's real. I'm naming it because fundraisers and finance folks often differ widely in how they see the world, the lens through which they see the world. Communication breakdowns. Development recorded a pledge, but the fundraiser or accountants never got the documentation, for example. And how do we measure our success? Is it just the bottom line and how much money we have in the bank, or are there other ways to say whether or not we're successful, particularly, of course, for fundraising, because we do have a lot of other ways that we measure our success, right? Right? Okay. So, what are your issues? I know we have, I think, like 98% fundraisers in this crowd, but are there issues that you have with finance folks or fundraising folks, for our few brave finance people out there? I see a hand already that you have in your organization. What have we got online?
Well, actually, while people are taking a moment to write down, we actually have a question from the previous slide.
I see. Okay.
So somebody asks, what are some ways you have seen to record multi-year gifts? Because our other income section on the P&L makes things really confusing sometimes.
Well, and I was talking with one of our guests here is a finance person. I was speaking before, and I literally went out to refresh and confirm my memory about multi-year gifts, in that multi-year gift is recorded for the financial statements in the year that it is received. So let's do an example. We receive a $100,000 5-year pledge. $20,000 a year that they're going to pay on January 1st. In 2019, so this year, even though January, okay, July 1st. How is it recorded? $100,000 is recorded in 2019 revenue. The full amount of the pledge is recorded, okay? Pledge payments would be recorded as payments on that to the master pledge as received, $20,000 a year. Okay. Now, hopefully I'm answering your question, but there's a little bit more to it. Okay. In 2020, and a lot of this comes from personal experience. I'm making my budget for 2020 after having received this pledge. Okay. And I go to my major gifts planning and I say, I've already got $20,000 that I can rely on coming in next year. Is that true? It is not true. And that's a big mistake I made at a job once. The entire $100,000 was counted in 2019. Remember? Back to accrual accounting. We recorded that $100,000 pledge when we received it as a letter or a contract with a major donor or whatever the document was, spelling out the terms and conditions of the gift. The $20,000 coming in each year will be cash receipts. We'll have cash coming in, but when it comes time to budget, that ship has sailed. Okay? Does that make sense to everybody? And does that address the question from our friends online that had it?
She says, yes, thank you.
Okay, you're welcome. So you've had a little time to think about your own issues. Let's hear it. What have we got going on with our finance teams or our fundraising teams? I suspect Austin's going to be busy at this point.
At the moment, I don't have anyone sharing.
Everybody's frantically typing. Remember, it stays in the room. We aren't going to, go to your whoever and report you for having, well, you know what I'm trying to say.
Some of them mentioned that they had sufficient on the Padlet type things.
Okay.
I'll pull that up and we can take a look at those as
I was
well.
going to say, I had one question on Padlet this morning when I opened it, and somebody wanted to know about changing fiscal years, which sort of is outside of dealing with your finance team, but it's a finance question, so I'll answer it. Yes, you may change fiscal years at some point. What you need to do, well, that'll take a lot of internal planning, right? Because you're going to be shifting a lot of your obligations and expectations from one date to another. So you want to be very careful to make sure that you have sufficient reserves or cash coming in that you can do that without putting the organization at risk. The IRS requires a form, I think it's 1128, that you submit to them, and then you're good to go. It's not that difficult. I've been in an organization that did it with pretty few repercussions. So yeah, the answer is yes.
All right. And we had someone else who just raised their hand if they want to unmute and ask a question.
Sure.
I'm not sure if they had a question they wanted to ask.
Don't be shy.
Well, if they submit the question, I'll let you know.
Okay, what have we got going on online? Padlet. Did I hit the only one?
I believe so.
Okay. Yeah. And none of my friends here, I'm putting you on the spot, have any issues? You all get on fine with your team, or it doesn't apply, or whatever?
Most common is like you said, personality. Yeah. And how do you approach that?
Well, I've got some suggestions, so why don't we go ahead and move on? There's one? Okay.
Oh, yeah. The person who asked the financial statements, the question you just answered, she asks a follow-up question saying that she'd be curious to hear what the organization you were working with that made the switch, that, like, with she worked with that made the switch was hoping to accomplish? Or what the organization you made the switch with was hoping to accomplish?
They was a line of the fiscal year with the main bulk of activity. The planning was kind of off kilter because, you know, we started the year at a certain point and then it got super busy at a different point, and the board felt that it would be better to move the fiscal year to that. It was like because summer was a big busy period and the fiscal year started in January, and the board felt that if we had a July through June fiscal year, that our activities would better reflect what was actually going on in the agency. Okay, is that helpful?
I believe so.
Okay, great. So let's go on. Anybody who thinks of issues as we go, feel free. Personalities was mentioned.
Yeah.
So let's look at the differences between finance and fundraising folks. We have different priorities, right? Finance's priority is accuracy, timely information, and the safeguarding of the organization's resources. That is their mandate, okay? And I'm going to confess myself guilty to having gone to them and saying, you know, why are you so conservative all the time? Why are you so uptight? Why do you have to cross the T's and dot the I's? That's their job, okay? The same as it was mine to raise money. So, you know, we can celebrate the differences, right? They do tend to be more conservative. And of course, software is at the bottom of both of these because so often the two systems are separate and do not talk to each other. Who has that experience? Well, I'm seeing nodding all over the place, right? Other fundraisers, and I count myself as one for the most part. What's our priority? Donor relationships and the ability to, because of those relationships, we have to be flexible and responsive. All right? Something's a little outside of a deadline, or that's not a good way of saying it. If a donor wants to make a pledge to us on the 2nd of the month, we're not going to say, oh, I wish you'd done that on the 29th, because then we could count it towards last month. No, we're like, thank you very much. And then we try to, right? We aren't so concerned with the fact that it's 2 days after maybe we'd like to see it because the books are already closed. We have to be able to punt, essentially. We tend to be optimists, right? Anyone disagree? Fundraisers are optimists. And again, the software thing, it is a recurring issue that I have to keep bringing up. So we're all accountable to different constituencies, if you will. Okay, sorry about the funky arrows. I had a little bit of trouble making them work. Fundraisers are accountable to, first of all, their donors and volunteers, right? Fundraisers, and it's amazing to me on either side of the coin don't know this, fundraisers have a code of professional ethics and a donor bill of rights that they must follow if they want to be in, you know, doing the thing as professional. What's the word I'm finding?
Regulation.
Thank you. Finance, often, not always, but often, are responsible to the auditors who are going to come and evaluate whether or not the financial statements are correct, okay? They are responsible to GAAP, to upholding those principles so that the auditors find that everything is shipshape, right? And financial folks have their own ethical standards set by their several financial management associations, the AICAP, et cetera, et cetera. All right, so we have differing lines of accountability. They join together because we both usually report to the executive director. We all report to the board, who they themselves report to the community. Okay, and this is where, in my view, finance and fundraising merge, because we all care about enacting our mission and maintaining the trust of the public so that they feel confident in making donations to us and coming to us for services, etc. Okay? And I will be sending you these too. Don't forget, Stephanie. So, good. Everybody with me so far? Anything else that I'm missing about this kind of accountability thing. So you're starting to see why we think differently, right? Go ahead, Austin. So what can we do about this? Personality thing, I don't know. I mean, I love finance folks, maybe because I sort of am one myself, and I like numbers and data and all that, but they are more conservative than us. My hope and plan for this talk is that you, by understanding who they are accountable to, makes you, on both sides, makes you a little bit more sympathetic to what they have to deal with, okay? But there are some concrete suggestions I have. We can collaborate on the budget. Now, I'll be the first to tell you that there are political realities here that sometimes it's not possible. But if there is an open door that you aren't you being the person having an issue, not the fundraising or finance necessarily, but if you personally are having an issue and the door's open to participating in budgeting and you aren't stepping through because you're intimidated or you don't have the time or whatever the thing, get in. I would suggest you get in there and work on it, you know. Having a voice at the table is going to keep you from unrealistic expectations and goals being set if you're not there giving them the right. Have accounting and fundraising 101 training. Lack of understanding terminology and approach has been cited as one of the biggest problems between the two teams. So something like as simple as what I'm doing today for the fundraisers, take a staff meeting, talk to the finance team about your development plan or what it means when you say you're doing moves management or whatever. Make it clear and simple to them what you're trying to accomplish and how you're getting there, okay? Build a shared terminology and metrics cheat sheet. Go where the other person is. The other person, the other team, I hope you understand what I mean when I say that. If your finance folks are not understanding why it takes you 6 months to a year and a half to bring in a major gift, sit down with them and show them the steps that are involved and help them to understand why it does take so long. So they aren't saying, you know, we just hired a gift officer last week and they haven't even brought in $100,000 yet. I exaggerate for effect, right? Make time for each other. And then when it comes to software, it's not always predictable, but evaluate where you can integrate your two systems and where you can't, all right? It might be as simple as, and I recommend this in any position I'm in, it might be as simple as making your account numbers match up so that major gifts to development is the same as major gifts in finance, okay? I mean, I've been in places where one department called them individuals, and one department called them major gifts, and the other one named them, you know, the Ruby Society or whatever it was. It's like, wait a minute, are we all talking about the same thing? That might be simple, something like that, okay? Go ahead, Austin. I'm going to share some of my own experience here. Hopefully, basic tenets that we've talked about today will now tell you why this matters. Everyone has to understand fund accounting. Otherwise, and I mean everyone, and this comes from a personal experience where we just got a very large grant at an organization I was working at, and before that we'd been, well, and we still did, before that we had been facing a deficit. And we got a 6-figure grant, and one of my board members came into my office and said, we're not gonna have a deficit now, we just got all this money. Well, it was restricted grant. It was for a particular program over a number of years. And I had to explain, I said, you need to understand that that is restricted. It is not going to be able to cover the deficit. What? Some of your folks won't understand the difference between for-profit and non-profit accounting and how this all works. Everyone has to be on the same page about it. It's kind of like cash flow. Reporting is done on a regular basis each accounting period, okay? Now, this has probably happened to all of us, right? Going back to what I just said about the major donor making a gift on the 2nd of the month, the books close on the 30th or 31st, We get a gift on the 2nd, and the board meeting's on the 10th. What are the reports going to say? Finance report is going to say what we got on the 30th. The fundraising development report may or may not, depending on what you've worked in, this is why I'm bringing it up, may or may not have that gift in it, right? But if it does, they're going to differ. And your board's going to be looking at, say, which one do I believe? And then you have to explain, and it's awkward. And da. So know that reporting is done on a regular basis, and either agree on the timing with your finance team, say, okay, the 30th is down. Any gifts that come in afterwards are not in the reports at all. Or, I've done this too, educate your board and say, you know, the development system is different from the finance system, so you may see differences, and here's why, and we are here to explain any of them to you. Whatever works best for your organization's culture, right? The IRS regulates how in-kind gifts may be counted. You cannot just willy-nilly said, yeah, they made that in-kind gift to us, and we can count it as revenue, right? And the finance team's going to say, well, did X, Y, and Z happen? And if you say no, and then there's going to be, but wait, fundraising people will say, well, it's so hard to get that. And the finance people will say, well, I'm sorry, but we aren't allowed to count it. Figure that out. The relationship building process takes time. I've already mentioned this. When we expand our development staff in order to bring in more money, often the expectation of the organization is that's good, bam, we're going to hire a grant writer, bam, next week we're going to be X. Major gifts person, they're going to be flocking in the door after a month. We need to educate our finance folks especially on how long it's going to take for a return on that position or that investment, however you want to look at it, to happen. And then the donor intent has to be understood. It's kind of like number one, but even more specifically. I can't tell you, oh man, I had an organization once where a large gift was not all spent. They did great, they delivered the program, saved a little money, whatever, and there was money left over, right? CFO comes and says, okay, where can we put this money? You know, can we move it over here? And I'm like, no. Well, why not? It's ours. Well, again, that's why on the governing slide, educate your finance team or finance people, educate your development team on the requirements of who you're accountable to, because the finance CFO in that organization had no idea that there was a code of ethics and that fundraisers are responsible to donors, that their gift is used only in the matter in which it's given, intended, designated, unless you get the donor's permission to move the funds around. And that could cause it ended up the donor leaving, and it was a nightmare. So that's my experience. Anybody have anything to share that I've missed that would be important to add? I know it's a lot today, right? You're like, oh, it's Thursday, Angela. Can't we just go out and enjoy our lunch in the sun? Okay, well, thank you very much. I have a next step for you. How are we doing for time? Am I coming in on?
You've got 7 minutes.
Okay, so I want you to think about, even if you didn't share them, some issues that you identified as being problematic or tension between you and your fundraising team or your finance team. And think of just one step that you can take when you go back to the office or shut down this webinar or whatever. Anybody want to share? Anybody brave? What's one step?
Typing, so maybe.
One step you can take.
I'm going to go back and ask for specific things like a new hire, and I got shoved a basic budget, but I have no variances, I have no goals. And so it'd be interesting to see what response I get, how easy it is to get those.
So asking about a budget is a new hire. Excellent. That's super important to know.
I mean, I have it, but I don't have anything to compare it to.
Yeah. Yeah, you'll need that. Good call.
We have one person online who says that she will be developing a cheat sheet of how terminology varies between the two software systems.
Great. And if you, I'll include with in my classes I have a fabulous one. It's a table that specifically talks about the difference in terminology. So I'll try to remember to include that. Austin will remind me.
All right.
Okay, so if you're, we have another one?
Yeah, we have two more.
Okay.
One person says that they're working on communication between finance and donor records, and another person says
Great.
that she is already asking about changing their accounting method from cash to accrual.
Hooray! All right, so if you have a step or you're thinking about one, here's what I want you to do. There's a fabulous website called futureme.org, and you can send an email to yourself at a point in time in the future. So say you want to have the cash to accrual conversation by the end of August. Go out there, send yourself an email for August 31st, and then you'll be reminded. We aren't going to leave this without and not take another step. You'll be reminded August 31st. I need to have that conversation if I haven't already. Okay? That's a great thought, by the way. All right. So, okay, I think we covered the ones from the website. Anything I didn't cover? Any burning questions that you thought would be addressed today that have not been? It's a big topic, I understand, guys. I mean, you know, financial management, people get entire degrees in it. And here we packed it all into about an hour.
We don't have any questions at the moment.
Okay.
Oh, well, somebody might be typing, so maybe
Okay,
we'll have
typing.
a question at the end.
Typing. You look exhausted now.
She's just like, there's so much work
And
ahead.
your hands are like spinning, right? Yes.
Somebody asks about the best resources for training their board.
In what? Which? Or both?
Let me find out.
Okay.
But she says both.
Both. All right. So there are a couple of good places to go. The National Council of Nonprofits has sections on both financial management and fundraising that are very good. If you Google fundraising and financial management, you actually get a number of articles about how the two relate. What's the foundation?
Washington Nonprofit.
Huh?
Washington Nonprofit organization.
Washington Nonprofits has a whole
Section.
training that they do on financial management. They don't do fundraising, but that's why I have a job. So you can come here anytime that you have questions about or want to participate in our workshops. For fundraising training, also AFP is the top association for fundraising training in the area. They have a great set of programs for both more experienced leaders and brand new folks into the field. There's an excellent book that I use in my classes, which is Financial Management for the Non-Financial Executive or something like that. It's published by folks in California. I'm going to send it with you because the authors' names are escaping me.
All right. She says, thank you.
You're very welcome. Important stuff. I'm glad you guys are realizing that and taking the time to be with us to learn more. So finally, my contact information will be in the slide. It always is. I'm always happy to help you. Happy to help you with your ongoing financial management questions, your ongoing fundraising questions, how the two work together, etc. Just feel free to shoot an email or a call over, and I'll see what I can do for you. If I don't have the information, I will send you to someone who does. Thank you for being here today, and this will be on our list probably by tomorrow, as soon as our IT folks send me the link. Okay, great. Thanks a lot. Have a great weekend, and see you in August.
So do you come quarterly or monthly? I guess?
Monthly.
What month is it?
Yeah, with your business card, if that's okay.